Hello, I'm Rick Hough, Chairman and CEO of Silvercrest Asset Management. I'm joined today by Robert Teeter, Chief Strategist at the firm. Rob and I just got back from China. Rob, what were your impressions?
Great trip, great time to be there, given all that's going on in the global economy, seeing the second most powerful economy in the world. And one of the things that it really reminded me of is how important it is to travel. So I hadn't been to mainland China since 2019. Getting there in person, you're really reminded of these face-to-face conversations are so important. And I think part of the things that we all lost during the COVID lockdown were those face-to-face conversations and travel. So great to get out into the world, meet a lot of great companies and network contacts, and really understand what's going on bottom up in China.
Sure. Did you notice a lot of changes over the past 6 years since your last visit?
I didn't, although I was expecting some change. I was expecting perhaps a little bit more tension in the conversations, a little bit more pushback on what's going on in trade. And that really wasn't there in any
No.
meaningful way. People
Yeah.
really wanted to work and do business.
That was really eye-opening for me, was how practical Chinese business people were about the realities of our resetting in global trade or
Yes.
the economy. Obviously being led right now by the biggest economy in the world, the United States. That was quite eye-opening. I found them very practical.
Yes, absolutely. That was a really important takeaway that I think just informs the fact that this is a transition period, but it's not an end, and there's progress being made. And once we get through some of these tough conversations, it seems like companies around the world just want to get back to work and
Yep.
start growing and adapting to whatever the rules are.
Even more surprising, I think, was an understanding among the counterparts we were meeting with that there does need to be some rebalancing in the global economy, including in their own economy. They acknowledged what they have to do and what they thought they understood the United States was doing in pursuing its interests.
Yeah, I think that's absolutely spot on. We're 25 years or so from China joining the WTO. The world has changed since then. China's changed, the US has changed, and it's a good time to revisit things and perhaps reset the table and start looking ahead to the next 25 years.
Quite aside from the fact that I learned that I actually like Chinese food after experiencing it there.
The real Chinese
Well,
food.
yeah, one big surprise for me, regardless of where we were, was how every road sign was in both Chinese and English.
Yes.
I was just
Yes.
surprised to see it to that extent.
Starting at the airport when we landed in Beijing and saying in English, "Welcome to Beijing," pretty welcoming and different from what you might assume that you'd be walking into.
Exactly, quite easy to get around. I would say there was some anxiety about trade and where it's going,
Yes.
of course.
Absolutely.
They were worried as business people. 50% of Chinese economy is not state-owned. It's entrepreneurial, and companies that list not just on the Hong Kong exchange, but here in New York City on the New York
Yes.
Stock Exchange and the NASDAQ. It seemed that while there was concern about what it means for global markets and trade, it was the exact same conversation we were having with our clients here.
Yes.
It was really no different. I was surprised. I was also surprised at the lack of animosity around the issue. They seemed to approach it as a practical one of negotiation.
Yes.
But the second concern they had was actually not about trade. It was more about the flow of capital and whether or not there would be continued availability to list companies, Chinese companies, on the New York Stock Exchange and on NASDAQ.
Yes. And I think we've talked about that some here. I think our view is that markets are open. And these companies here in the U.S. that are, run the exchanges are run for wanting listings and wanting more listings. And so long as the rules are met, while there might be some political pressure and there might be some increased scrutiny on the listings and on the, some of the standards around accounting and governance and things like that, the markets will remain open. And I think it's very similar to the concept of, we've talked about how the IPO window and the M&A market are sort of in a holding period right now because of all this unknown. Well, the same thing is true for listings of Chinese companies, perhaps in Hong Kong and the U.S. But once we clear up some of these changes, I think we get right back to where we were previously.
Right. And when we look at trade and flows, there were two obvious points that were acknowledged while we were there. One was that there are some easy areas where China can rebalance trade with the United States.
Yes.
Purchase of energy, agriculture, technology to some extent.
Mhm.
They're becoming a technological powerhouse,
Yes.
but still, we have obviously world-class leading technology and financial services.
Yes.
The capital surplus that they have as a result of the trade deficit means that it's very important to access capital markets here.
Yes, absolutely. The reinvestment of that capital is critical, and I think even stepping partly aside from China, it remains pretty clear on paper that while some of the characteristics that put the U.S. at the top of that list for most investors have maybe declined slightly in the past, we still remain a top destination for capital globally. Demographics are solid, growth is solid, legal and governance is solid, fantastic companies here, as you had mentioned. So while there might be some reevaluation of that and a rebalancing at the margin, as we've seen perhaps this year and some focus overseas, the U.S. still remains a great destination for capital.
Right. So there's no such thing as free trade. It's all negotiated
Yes,
trade. It's
yes.
always been the case. We're seeing this huge disruption. They express the same kinds of concerns that we're hearing here
Yes.
on behalf of investors, that it was so identical, it almost didn't matter what country we were in. I
Right.
was most surprised by that. What was the biggest surprise you had when during our visit?
That's a great question. I think continue to be very impressed by the professionalism of everyone we met, the focus on innovation. I would say one, not really surprise perhaps, and maybe not even directly related to the meetings, but one observation that I think we realized is things like the penetration of EVs in China.
Right.
That policy has been clear. It's clearly happening. I think another surprise, and I think we both observed it when we took the train from Beijing to Shanghai, is just it's a great reminder of the scale of China and the number of people and the number
Right.
of large metro areas. It's really massive, and you can read about it, but when you see it in person, it really hits home as to how big and innovative China can be.
Yeah. I was most taken with one of the companies we met that has an autonomous trucking
Yes.
capability. And I think they have something like 5,000 autonomous semi-trailer trucks on the road. 4,000, 5,000.
Yeah.
Do you recall?
I don't
what it was?
remember the exact number, although interestingly enough, just yesterday there was an article about that company in Bloomberg and talking about their innovation in trucking. And there was a similar article about a US-based company that they were comparing themselves to, working on a similar project
I saw
in
the
Texas.
American company, I think it was Houston or
Yes.
something like that. And they may
Yes.
go to El Paso,
Yes.
starting on a small scale.
That's right.
But I was quite impressed by the efficiencies that automation,
Yes.
autonomous driving, AI-driven
Right.
camera technology is bringing to that industry. Those very slim margins, very difficult labor issues, and that's one of the examples where we're going to see innovation allow for greater growth in the future.
Yes, absolutely. Great technology. And it's one of the shared characteristics of the US and China in terms of having very sizable domestic markets. So when you create this technology, you have a very large platform that you can sell it across. So even though the company we met in China was only selling it to China,
Right.
it's a massive number of trucks that can be outfitted with this technology just in their local market.
Well, that local market aspect was the other thing that I took away. They are very interested in boosting their own internal consumption, internal economy.
Yes.
They are an export nation. Obviously, we're one of their largest, if not largest, trade partner in the world.
Mhm.
The rebalancing that they were talking about having to go through is turning to a company that has a much more robust, big internal economy based on consumption. The United States went through the exact same thing.
Yeah.
We were an export nation. We were supplying Europe and the rest of the world. And we pivoted, especially post-World War II, as
Yes.
we rebuilt Japan and Europe.
Yeah.
So we've seen that.
Yes.
This is what an advanced economy goes through. I found that interesting, and I found their awareness of it interesting.
Very much. And I think it's something people lose track of because they hear about these issues, something like rebalancing, and lose focus and lose track of the issue over a week or month without hearing about it. And these are things that play out incrementally over time. And some of that rebalancing in China and focus on domestic economy has evolved, even over the last 8 years, and it will continue to do so. Just like you pointed out, the rebalancing in the U.S., it didn't happen overnight. It played out over a number of years.
It also, I think, implies when it plays out over decades, it doesn't mean there's a winner and a loser.
Yes,
It certainly wasn't the case for the U.S. and Europe.
correct.
Not necessarily. I mean,
Right.
the growth rates of the economies are different, but it's not because necessarily of our trade policies.
Right. Yeah.
Would you agree with that?
Absolutely. I think that's also something that people lose track of, is this is not a binary outcome where one side goes to 1 and one goes to 0. It's a
Right.
rebalancing and an evolution over time, and other things evolve throughout the course of that process as well.
I also found it interesting to see the differences regionally in China. It's massive.
Yes.
The obvious multi-ethnic nature of its state was fascinating to me. We didn't get to indulge in much culture. It was a business trip.
Yes.
But the reason, of course, we went over is because we have a Singapore office.
Yes.
And while it's quite a long flight from China, once you're on the other side of the planet, it makes sense, to visit other places. Singapore seemed to be pretty dynamic. In fact, better than the last time we were there. I don't know what your observations were about Singapore.
Yeah, very dynamic and lively. Clearly becoming a global hub for capital. Having seen the reopening process play out from post-COVID, and having been there early days when there was tracking and checking in at locations and things, it's great to see it back to a very dynamic, lively spot with lots
Right.
of people out and about, and just like we see here in New York. But the increased activity and flows, I think, are very interesting and fascinating. The number of family office formations there, and really
Right.
the focus on building up intellectual capital in that part of the world.
Which is so important. The other thing that we're seeing visiting Singapore is the families who are now much more interested in multi-asset class allocations for the long term, a much more long-term perspective on how to manage your assets for family legacy or
Right.
purposes, much more balanced.
Yes.
That's a transition, of course, that's happening in any place with emerging wealth, but it seems particular there. The capital has flown, has gone there, and seems to be seeking that. It's something we take for granted because that is the model, basically, here in the United States. But it's exciting to see that happen now for a second and third generation of wealth creation centered around South Asia.
Yes, it's great to see that evolution, and it's interesting how there's so much capital that's going through that process at the same time, largely because a lot of the wealth was created at the same time. And as you noted, now we're moving into second or sometimes third generations that have a different view on how the wealth and capital should be managed. And it's evolving towards something that we've seen a lot of here in the U.S. So that intersection is really exciting and interesting to be a part of.
And not a dissimilar path from the United States.
Yes.
Of course, the United States, as I mentioned, being a manufacturing export powerhouse, but it started in many respects with commodities.
Right.
And strong commodities. Of course, we live in an abundant country of
Yes.
resources, right? Energy is going to continue to be
Right.
one of our most significant exports. But a lot of these families became wealthy on basic manufacturing and in
Yes.
particular commodities. And now they're transitioning into other kinds of businesses with their capital, not unlike happened here in the United States.
Yes, absolutely. Moving to diversification, multi-asset class, global thinking, sort of normal best practices for investing.
The challenge for us is to stay on top of global trends and thinking, to look beyond our borders, to think
Yes.
about the global economy. It's so intertwined. There's no tearing it apart. That's one thing that is very clear, that we are going to have these partners. The question is how we best work with them.
Yes.
Yeah.
Absolutely. Important to link up the knowledge and expertise. And that's one reason why it's so great to get out and travel and visit all these exciting places.
Yeah. Any last thoughts, Rob?
No, it was a great trip. It was great to travel with you.
Yeah, it was good to be together.
Really fun to have a lot of perspective on what's going on around the world.
Great. Thank you.
Thanks, Rick.